Hi, everybody. Let's look at the income statement today. But before we do, let's look at the four financial statements used here in the United States, and then we'll concentrate on what the income statement has to say. So looking at our four basic financial statements, we've got the balance sheet or the statement of financial position. Shows assets, liabilities, and equity at a particular point of time. And that's the key to the balance sheet. It is a snapshot of how a business or entity looks at a particular point of time with assets, liabilities, and equity. And we remember that assets are what the entity owns, liabilities are what it owes, and then equity is net worth, its interest in those assets. The income statement that we're going to look at further, otherwise known as the statement of profit and loss, shows revenues, expenses, and net income or net loss for a particular period of time. And that's an important concept for the income statement and the other financial statements is the concept of periodicity. Is what period of time are we talking about? Day, week, month, year to date. That's a very important concept when we look at these financial statements. So we're going to look at the income statement that shows revenues, what the company has made this period, expenses, those costs incurred to earn the income, and then whether the entity has a net income or net loss for the period. The statement of changes in equity, up there at the balance sheet, we said equity was the net worth of the business or the entity. How did that change over a period of time? So that's what we see with the statement of changes in equity. And then the cash flow statement shows how cash and cash equivalents have changed over a period of time. So each one of the four basic financial statements tells us something different about the entity, and then we can put those together and try to get a picture of what really happened for this entity. Well, let's look at our income statement calculations here. Now, if you've got a business or going concern, you're either going to sell your services or you're going to sell a product. If you sell a service, we've just got a service business. So what we see is the income minus the expenses for the period. And when we subtract income minus expenses, we're going to have our net income or loss there for the income statement for a service business. Okay, let's look for a merchandising business. We're selling a product. We're selling stuff. So what we've got to do is take our income from the sales of the product and take away the product expenses, the cost of what we sold. Now that section is called the cost of goods sold or the cost of sales section. That's not what we bought for resale. It's what we have sold up there in the income. So we've got income up at the top minus the cost of what we sold, and that's going to give us a figure called gross profit. Now, once we have the gross profit, from that, we're going to subtract our period expenses, rent, utilities, and so on, and then come up with a net income or net loss for the period for the income statement. So the service business only sells service. The merchandising business sells a product. And the bottom line of the income statement, we know when we get down here to this bottom line here, we've got three things. We've got net income, a net loss, or break even. Net income or net profit, when revenues are greater than expenses, we're going to have a net income or a net profit for the period. When expenses are greater than revenues, we're going to have a loss for the period. Now, some entities like nonprofit organizations shoot for break even. Maybe they're on a grant and they're going to take their revenues and they want to expend all the revenues from their grant. So they're going to shoot for a break even. That you've got the income at the top, subtract out your expenses, and when revenues equal expenses, that is, break even for the entity. Again, let's look at some income statement concepts. Again, periodicity. What time period are we talking about? Uh, we can do an income statement for today. Did we make money today? This week, month to date, year to date. What time period are we talking about? You know, some of the retail entities, for some of the retail businesses, they may lose money from January through September. But they may make enough in the holidays from October to December to make a profit so that they've got a profit for the whole year. So we have to look at, like I said, the period of time we're talking about. So the content, so the concept of periodicity is very important. Another thing to look at is what we call the basis of accounting, the cash basis versus the accrual basis. You know, we as individual taxpayers and small businesses, we can be on the cash basis of accounting. Think checkbook. It's cash coming in, we show as income, and then expenses paid, cash going out. That's our expenses. So that's cash basis. Like I said, straight out of your checkbook. Bigger entities need to be on the accrual basis, and that's correct, generally accepted accounting principles, to be on the accrual basis. That we show an income earned, whether or not it's collected yet. We've got income earned we show as income, and then the expenses that we show on the income statement are the expenses that we've incurred. We may not have paid them yet, but we've incurred them. And so that gives us, we've got the matching principle that we try to match income and expenses to get us the best picture, the truest picture of net income or net loss for the period. So we want to shoot for the accrual basis, the best picture we can of what actually happened with the business, and that's going to be with the accrual basis. Remember, income earned but not received is accounts receivable on the balance sheet. Expenses that we've incurred but not paid yet, that's accounts payable on the balance sheet. So the accrual basis shows us on the income statement the income that we've earned for the period, whether or not collected, and the expenses incurred, whether or not they've been paid. So that's kind of a quick overview of the income statement. I hope it helps clear things up, and I do appreciate you watching.